Hello and welcome to my tutorial on Assessment 1 Task 6 from the AAT Mock Exams for Management Accounts. Let's jump straight in. There's two versions of Task 6 you may get. You have a look at Assessment 1, which we are now on Assessment 2, and they're completely different. This one starts with batch costing, followed by being able to calculate the cost per unit after you've calculated the batch. Right, so let's start reading. Crest Paints Limited, or CPL, planning to launch a new water-resistant emulsion paint for bathrooms and kitchens called WR52. This will be manufactured in batches of 50,000 cans. So that's an important thing to remember. If we're going to be calculating per unit, we're going to need to know how many units there are. And they said there's 50,000 cans in a batch, so I always put that to one side. It's going to come up, okay? Following cost estimates have been produced per batch of WR52, and then they show you they've got all the different costs. You've got direct material, direct labour, variable costs, fixed production, administration, and then the total cost. Question A. Calculate the estimated prime cost per batch of WR52. So the prime cost is just the direct cost, so it's the first two, 103 plus 105. 103,000 plus 105,000, and we get 208,000. Okay, that's what a prime cost is, just a direct cost. Now marginal cost is the direct cost plus the variable cost, so we could get the 208,000 and just add on the 84,000 variable costs, and we end up at 292,000. Now if we look at the next part of the question, it says calculate the estimated full absorption cost of the batch. Now full absorption cost is the direct cost, the variable cost, and the fixed cost. So we could just get the marginal cost and then add on the 34,000 fixed costs, and we end up at 326,000. If we carry on now, calculate the estimated marginal cost per one can. So we've got the marginal cost, which is here, and we need to divide it by the 50,000 units that we wrote and kept to one side, didn't we? So if we get the marginal cost and divide it by 50,000, we will get £5.84 per can. The next question is the full absorption cost of one can. So that's the same, but just using the full absorption total, which was 326,000, and you divide that by the 50,000 units, you end up with £6.52. The next question, that concludes, the batch part of the of task 6. Now we're moving on to where it all goes into a multiple choice. We'll get maybe a question about inventory valuation, one about ethics, and one about profit centres and cost centres and different centres, and also one about why would you do a certain managerial decision like report segmented profit or losses. So anyway, without further ado, let's go. Which of the following costs would never be included in CPL's inventory valuation? Now you've got marginal costs, period costs, prime costs, and product costs. So let's go through it. Marginal costs would be, because in an inventory valuation you take into account the direct costs and the variable costs, so marginal would be in there. Prime cost would be in there because the direct cost. The product cost would be in there because if you put raw materials together as direct costs, that would be in there. But the period costs would not be in there, so that's why it would be period costs. Okay, so which of these is an example of unethical behaviour by one of CPL's accounting technicians? So normally with the ethics questions there's one that's really obvious and the other three are silly. So let's have a look. Calculating profits objectively rather than subjectively. So you want to be objective, not subjective, so that's wrong. Value inventory, you want to be objective, yeah. So value inventory so as to maximise a period's profit. Well, you should never be trying to maximise it. It should be what it is. Okay. Treating CPL's costs as confidential. Well, you would want to do that. And allocating CPL's costs between products objectively. That's correct because it's objective. Okay. Why might CPL decide to allocate its costs between the products of different departments to comply with accounting standards, to reduce its overall inventory valuation, to report segmented profit or losses, to speed up its internal reporting? Now the answer is to report segmented profit or losses, and the reason why is you might want to see which each cost centre, how much profit is coming from each one, so that you can make this better decisions on your company rather than looking at it as a whole. So you want to break it down, and that's why you would want to allocate its costs between the products of different departments. And then the final one, CPL's paint manufacturing department is a profit centre. Which of the following does its management control? Well, let's think about it for a second. What do you need to make profit? You need revenue and you need expenses or costs or whatever you want to call it, yeah? Right, so the answer has to be costs and revenues, which is here.